All right, there's a huge question hanging over the market, and that's exactly what we're tackling today, the 2026 tech reset.
Yeah, let's just jump right in. Because let's be honest, the one question on every investor's mind right now is this. After all this explosive growth, is the AI bubble finally about to burst? And if you want to understand just how high the stakes are, just look at this number $1.3 trillion. That's a trillion with a T. That's how much market value big tech has already lost just in the early part of 2026. Why? Because the fear around AI spending is hitting all the big guys. We're talking Nvidia, Microsoft, Amazon. The pressure is seriously on. Okay, so let's break this down. First up, we're going to look at the anatomy of a bubble. We're going to build the case for a crash, the exact argument that has so many experts sounding the alarm bells. And look, this isn't just some fringe theory cooked up on the internet. This is mainstream. What's really telling is that according to recent Deutsche Bank surveys, a full 57% of investors, that's a huge majority, see a plunge in AI and tech valuations as the #1 biggest threat to the market, period. So how in the world did we get here? Well, it's kind of been a two-act play, right? Act 1 from 2023 through 2025 was all about incredible hype and these massive gains, just completely fueled by excitement around AI. But now, in Act 2, as we're into 2026, the whole story's changed. Now it's all about serious warnings, about valuations, and whether any of this is actually profitable. You know, the core issue really just boils down to one thing. Valuations have gone through the roof. I mean, the Shiller-Cape ratio, which is a super reliable way to measure long-term market valuation, it's hitting levels we literally haven't seen since the peak of the dot-com bubble. That's a historical echo you can't ignore it. And if that wasn't enough, just look at the spending. The big hyperscalers, Amazon, Microsoft, Google, they're on track to spend a mind-boggling $500 to $700 billion this year alone. And most of that is going straight into AI data centers and hardware. It's a spending frenzy like we have never seen before. But here's the catch, right? This is where the rubber meets the road. Investors are starting to get nervous and they're asking, hey, where's the return on all this cash? Because a lot of this spending is on depreciating assets like GPUs with no clear ROI yet. Basically, if real, tangible profits don't start showing up soon, you can bet that investor patience is going to run out, and fast. And it's not just about the spending. Oh no, there are other major storm clouds gathering. You've got the threat of interest rates staying high, you've got stubborn inflation that could be sparked by an energy shock, and then there's rising geopolitical tensions. Any one of those could be the pin that finally pops this valuation bubble. So, okay, that's the bear case. And you got to admit, it's a pretty compelling one. But this is where the story takes a turn. Because here's the thing about market downturns. They always follow a certain script. And history shows us, time and time again, that these resets are absolutely brutal. They punish the weak. But, and this is the important part, on the other side of that coin, they reward the strong. See, corrections aren't the end of the world. They're resets. And these resets, they create some of the absolute best buying opportunities for anyone who's actually prepared for them. All right, so let's shift gears. Let's look past all the short-term fear of a bubble and zoom out to a very different, much bigger picture, the long-term transformation that's underway. It's absolutely critical that we separate these two ideas. They are not the same thing. On one hand, you've got the fear of a short-term market bubble. Totally valid. But on the other, you have the reality of a long-term technological transformation. The bubble, that might be temporary, but the transformation, that's secular. What that means is it's a fundamental, multi-decade shift in how the world works. And the scale of this transformation, it is just immense. I mean, research is showing that AI could automate or help with tasks worth up to $4.5 trillion. And that's just in the US economy alone. This isn't just hype anymore, folks. This is a fundamental shift in productivity, and we are just getting started. And honestly, we've seen this movie before. Think about it. After the dot-com crash, the survivors, companies like Amazon, went on to deliver massive life-changing returns for patient investors. The argument here is that the same setup exists now. We could be seeing a repeat of that exact scenario for today's strongest companies. Okay, so this brings us to the most important part of this whole conversation, the so what, right? This is the smart money playbook. How do you actually prepare for a market reset and turn all this potential chaos into a real opportunity? The whole key here is learning how to spot what a generational buy actually looks like. And these companies tend to have four key things in common. First, real moats, a durable competitive advantage that keeps rivals at bay. Second, a proven track record of execution. Third, reliable recurring revenue. And finally, direct exposure to those long-term AI tailwinds we've been talking about. So one way to play this is to focus on the picks and shovels companies. Like in a gold rush, the people who really got rich were the ones selling the picks and shovels. In this case, we're talking about the companies building the core infrastructure. The obvious one is Nvidia, which just dominates the GPU market. Or think about Taiwan Semiconductor, the foundry powerhouse that literally makes the most advanced chips for everyone. Their tech is absolutely essential. Now, another angle you could take is looking at the AI software innovators. This is a different kind of play. Think of companies like Palantir, which is really carving out a niche for itself in deploying AI for big businesses, or ServiceNow, which is all about integrating AI into workflow automation. The cool thing here is they're less exposed to those crazy hardware cycles and are tied more directly to those long-term productivity gains. And hey, what if you're an investor who's looking for a little more stability? Totally fair. You could look toward the mature tech giants like Microsoft, who are just so deeply embedded in the AI race, it's not even funny. Or you could go for a broad market ETF like VGT. That way you get exposure to the whole trend, but with a lot more diversification built in. So here's the bottom line. The evidence strongly suggests a tech reset in 2026 is a very, very real possibility. It's being driven by those valuation fears and all the macro pressures we talked about. But, and this is the key takeaway, that reset is also a massive opportunity. The weak hands, they're going to panic and sell, but the smart money, they'll be getting ready to buy. Which really just leaves us with one final question for you to think about. A reset is coming. So, will you panic or will you prepare?